Welcome to Kharoo channel. We are solving the exercises of depreciation chapter, and in this video we are going to solve a sum by SLM method, that is practical problem 3 on page number 245. Let's go through the question. Question 3. Shubhangi Trading Company of Dombivli purchased machinery of rupees 86,000 on 1st January 2016 and immediately spent rupees 4,000 on its fixation and erection. So on 1st Jan 2016, there's a machinery we have purchased and the cost is 86,000 and plus any other incidental charges. Here we have fixation and erection charges will be added to the cost of asset as per accounting standard 10, 4,000. So in all this will be 90,000. Then on 1st October 2016, additional machinery costing rupees 40,000 was purchased. 1st October 16, this is next financial year, machinery 2 was purchased at 40,000. On 1st October 17, the machinery purchased on 1st Jan 16 became obsolete. Obsolete means it became outdated and was sold for rupees 70,000. 1st October 17, machinery 1. Let's say this is machinery 1 and this was sold on 1st October 17 for 70,000. On 1st July 17, a new machine was also purchased for rupees 45,000. So before this transaction, there is one more purchase transaction. 1st July 17, machinery 3 was purchased at 45,000. Depreciation was provided annually on 31st March at the rate of 12% per annum on fixed installment basis, that is straight line method. So straight line method at the rate 12% per annum. Prepare machinery account for 3 years and pass journal entries for 3rd year, that is 2017 and 18. So this is a summary of this sum. First transaction is in year financial year 15-16. There is one purchase transaction. In second year there is in financial year 16-17 there is again one purchase, and this is next financial year 17-18. There is one purchase and one sale. So we have to give journal entries for this 3rd year, these transactions. Based on this, we can start our working. Working note 1, calculation of depreciation. This is as per straight line method and the depreciation rate is 12%. So we will start with particulars. We have 3 machinery, so we will have machinery 1, 2 and 3, and at the end we will have total depreciation column. We will also have purchase date and purchase amount to start with. So in first year, 1st Jan 2016, purchased asset for 90,000. 90,000. So there are no other transactions in this year. So let's calculate the depreciation on this amount. Depreciation for financial year 15-16. The depreciation amount will be 90,000 into 12 divided by 100. This will give 10,800. This is for whole year, but we have purchased the asset in January and have used the asset for only 3 months during that financial year. So we will calculate for 3 months. 3 divided by 12 into 3 divided by 12. So the amount is depreciation amount in financial year 15-16 is 2,700. 2,700. How we got this amount? 90,000 into 12% into 3 divided by 12, right? So WDV as on 31st March 16 will be 2,700 minus 90,000. This is 87,300. So for financial year 15-16, the total depreciation will be 2,700. There is no other transaction. At the end of first year, the WDV will be 87,300. In second year, we have purchased another machinery, machine 2, for 40,000 on 1st October 16, 40,000. So there was no opening balance. During the year, we have purchased the machinery. The depreciation will be depreciation for financial year 16-17. So for first machinery, our calculation will be same as this is straight line method. We will calculate depreciation on 90,000 into 12 divided by 100. The amount is 10,800 and we have used this machinery for whole year. So 10,800 minus 87,300. The WDV will be 76,500. Okay. And for machinery 2, we will calculate on 40,000 into 12%. The amount is 4,800. 40,000 into 12% is 4,800. But the machinery was purchased in between the year. We have used the machinery only. We had this machinery with our business for only 6 months, from October, November, December, Jan, Feb, March, for 6 months. 6 divided by 12. So into 6 divided by 12. The depreciation amount for 16-17 financial year will be 2,400. 2,400 minus 40,000 is 37,600. In second year, now there are no other transactions. The total depreciation will be 10,800 plus 2,400. That is 13,200. And the WDV as on 31st March 2017 is 76,500 plus 37,600. This will give us 1,14,100. We have to do horizontal totals. Don't deduct this from this. This is wrong. In this column, what we are writing? Total depreciation and WDV at the year end. In third year, that is financial year 17-18, we have two transactions. One is purchase transaction and one is sale transaction. We are selling off first machinery. So machinery 3 was purchased on 1st July 17. Value is 45,000. Cost of asset is 45,000. In first year and second year, there were no depreciation for machinery 3. There is no opening WDV as we have purchased this amount in between the year. So depreciation for financial year 17-18. First machinery we have sold, we are selling it in between the year on 1st October 17. For first machinery 1, what will be the calculation? 76,500 is the WDV, but as the method is straight line method, we will calculate depreciation on 90,000, that is purchase amount. So what will be the calculation? 90,000 into 12%. Now this machinery we are going to sell in this year and the sale date is 1st October 2017. In this year, we had this machine in our business from April, May, June, July, August, September. On 1st October, we sold this machine. So for 6 months, we are going to calculate the depreciation. 6 divided by 12. On calci, 90,000 into 12% into 6 divided by 12. 5,400. Next machine is used for whole year. The calculation will be 40,000 into 12%. That is 4,800. And for third machine, it was purchased in between the year on 1st July. So we will have to work it out. 45,000 into 12%. For how many months it was in the business? It was in the business from July, August, September, October, November, December, Jan, Feb, March. That is for 9 months. So 9 divided by 12. Let's work it out on calci. 45,000 into 12 divided by 100, this is 12%, into 9 divided by 12, this is for 9 months. Amount is 4050. So the total depreciation for this financial year will be 4050 plus 4800 plus 5400, that is 14,250. So the WDV will be WDV as on 31st March 18. For machinery 2 and 3, the WDV will be as on 31st March 2018. But for machinery 1, we have sold this machinery in between the year. So for that, the WDV will be as on 1st October 2017. So let's calculate the WDVs. 76,500 minus 5,400 is 71,100. 37,600 minus 4,800 is 32,800. 32,800 and 45,000 minus 4050, 40,950. While taking the WDV total, we will take the total of machinery 2 and 3 only, because first machinery we have sold out. So that machinery is no more with us in the account. The balance will not be included. So the closing balance will be only 32,800 plus 40,950. That is 73,750. We have done with depreciation working. For first machine, we have to find out what is the profit or loss after selling it off. For that, we will do this working note 2, calculation of profit or loss on sale of machinery. We are selling machinery 1. So this is the working. Sale amount is 70,000. We are selling the machinery at 70,000. And the WDV at the end of, as on the date of sale, was 71,100. 71,100. So the WDV is more than sale amount. We have received less proceeds, then we have received less than the book value. That is, we have got a loss of 1,100. With this, all our workings are done, and now we can start our posting. What is the question asking? It is asking machinery account only for 3 years and journal entry for last year. So we will open in the books of Shubhangi Trading Company, Dombivali, we will open machinery account. On 1st Jan 2016, the entry will be machinery account debit to bank account. We are paying it with bank. So the amount is 90,000. Machinery account debit to bank account. This is 90,000. And in this year 15-16, there are no other entries, so we will pass a depreciation entry. On 31st March 2016, by depreciation, the amount is 2,700. 2,700. There are no other entries in this year, so we will close the book. 90,000 and 90,000. 90,000 minus 2,700, we will get 87,300. 87,300. This is 31,316 by balance closed down. Closing amount closed down, and next day we will carry forward this amount 1,416 to balance brought down 87,300. Then in second year there is purchase of 40,000 machinery. We will have to pass entry for that on 1st October 2016. We can see 1st October 2016 to bank account 40,000. And then in this year there is no other sale entry or so we will pass this depreciation entry on last day 31/3/17 by depreciation account. The amount is 13,200. At the year end we will close the books. The total will be 307, 8 plus 4, 12. 1,27,300. 1,20,000 7,300 minus 13,200 will give us 114,100. So the balancing figure is 31,317 by balance closed down 1,14,100. This tallies with our WDV calculation 1,14,100. So next year we will carry this amount forward 1,417 to balance brought down. The amount is 1,14,100. And in this year again we are purchasing one machinery 3 on 1st July 2017. The amount is 45,000. 1,717 to bank account 45,000. Yes, for third year we can, instead of first doing the posting, we can pass the journal entries first. On 2017 July 1, the entry will be for buying the asset, for buying the machinery account debit 45,000 to bank account, cash or bank account. We generally take bank account because big amounts we don't pay in cash generally, being machinery purchased. On 1st October 2017 we have sold first machinery. For that we have to pass entry now on October 1st. First we'll pass depreciation entry. So October 1st, what is the depreciation amount? 5,400. So the entry will be depreciation account debit 5,400 to machinery account 5,400, being depreciation charged. Then we will pass sales entry. While selling the asset we received 70,000 and the asset of 71,100 is going out of the business. So while receiving we will debit bank account debit the receiver with that rule, and when the asset goes out of the business we credit what goes out, and losses we debit the losses. So there are two debits and one credit for this entry. So the entry will be on same date first bank account debit, we are receiving 70,000, and one more debit is of loss on sale of asset, machinery account debit, the loss is of 1,100 to machinery account. The machinery is going out of business, so credit what goes out 71,100. Its book value we are reducing from our books, being machinery sold. M1. So 1st October entries are done. After that there are no other entries during the year. So as on 31st March, what are the other entries? So on 2018 March 31, we will pass the depreciation entry for 4,800 and 4,050, being the depreciation of the remaining assets. These we have machinery 2 and machinery 3 with us. Those assets will be depreciated at the year end. Depreciation account debit, this will be machinery 2 and machinery 3. Earlier machinery 1 we have already passed. So what will be the total? 4,000, 4,000, 8,000, 8,000, 850. 8,000 to machinery account 8,850, being depreciation charged. With this all the entries are passed, and now we will pass the year end entries. What are the year end entries? At the year end we are going to transfer all the balances of nominal account to the profit and loss account. So which are all nominal accounts that we have? We have depreciation account and loss on sale of machinery account. What is nominal account? All the incomes, gains, expenses and losses are the nominal account. We transfer it to profit and loss account to find what is the profit or loss the business has made, right? So with this we have depreciation, loss, and again one more depreciation account. The balance we will transfer in P&L account. So transfer entries on 31st. First we will transfer depreciation balance. The entry will be P&L account debit to depreciation account. The value will be 5400 plus 8850. That is 14,250 in total, right? So we'll transfer 14,250, 14,250 being depreciation balance transferred to P&L account. And after this, we'll pass the loss entry for 1100 amount. P&L account debit 1100 to loss on sale of machinery account, being loss transferred to P&L account. With this, all our journal entries are done, and on the basis of these journal entries, we can do the third year ledger posting. We have already done the posting of first entry, machinery account debit to bank account, right? So this entry is done. Machinery account is debited to bank account. Then which is the next machinery entry? This one, right? We have to pass this entry. We have to credit on 1st October 2017 by depreciation account. This depreciation is at the time of sale, right? 5,400. And then the sale entry, the machinery is going out of business. So 71,100 we have to pass, we have to credit, but we have to split this amount into 70,000 and 1100 as we have received 70,000 by bank. So by bank account 70,000 and by loss on sale of asset 1100. This entry is done. This way the total of 71,100 is going out of the business, right, by crediting machinery account, correct? And then is one more machinery account 8,850. This depreciation is on remaining asset, that is machinery 2 and 3. This entry we will pass on 31st March by depreciation account 8,850. The year-end entries are not going to affect the machinery account. So our posting is done. Let's close our books. The total is 100, 9 by 1, 159, 100, 114, 100 plus 45,000. The total is 1,59,100, and from that we will deduct 5,400 minus 70,000 minus 1,100 minus 8,850. This will give us 73,750. 31,318 by balance closed down, and this amount we will carry forward on the next day, 1st April 2018, to balance brought down 73,750, and this amount matches with our WDV 73,750. So what have we done in this sum? First we started with working note 1, calculation of depreciation, then working note 2 for calculation of profit or loss from sale of asset. With this working, we opened machinery account and did the posting for 3 years. The third year posting was done with the help of journal entries that we passed as required by the sum. So this was the practical problem 3 as per SLM method. This sum was from your textbook exercise. That's it for this video. If you find this video useful, please like the video, share it with your friends and subscribe for future notifications.